So this is one stock that I'm 100% going to buy. Hi everyone. So on today's video, we will discuss some of the key stocks that big fat investors are buying and selling. So I will talk both about Indian stock markets and the US stock markets. Understanding this video will give you a sense as to what are some of the good buying opportunities in the market. It will allow you to rebalance the portfolio in case you are waiting on the sidelines with a bunch of money that you want to put it in the stock market. Again, this video will give you an idea of what type of stocks you could consider buying in this market. So with that viewpoint in mind, let us start the discussion. And two very important disclaimers that I want to give out. First key disclaimer is that whenever I'm talking about the stock portfolio of any big investor, for example, Mr. Rakesh Jhunjhunwala, Mr. Radhakrishnan Damani, Mr. Vijay Kedia, Mr. Warren Buffett, I get to know this data at the end of the quarter. So what does that mean? It simply means that if Mr. Jhunjhunwala is buying something in January, then I will get to know about it probably in March, April. So that is a very important point because in this 2-3 month period, they might move their portfolio. So this is the first key thing, that these are not live updates. These are recent updates. It can give you a direction in which these big fat investors are investing. Second key point that you need to remember is that we don't get to see the entire portfolio of these big investors. For example, if a big investor is picking up 1% or more stake in a company, if they end up buying 1% or more equity in a particular company, then only they are legally required to disburse this information. So the word of the day today is disburse. But if a big fat investor is buying less than 1% of equity in big companies like Hindustan Unilever, HDFC Bank, Marico, etc., then they don't necessarily need to give out that information. Yes, you can try to analyze it through bulk deal, block deal data, but that is not something that they are legally required to do. So please keep these two key points in mind and let us start discussing our stocks for today. So first and foremost, let me disclose some of the recent moves that Mr. Rakesh Jhunjhunwala has made, and I will show you both the sides of the equation, some of the stocks that he has purchased and some of the stocks that he has sold. So he has added a company called as Jubilant Formova Limited, and he has increased his stake by 0.47%. He has increased his stake in Canara Bank by 0.36% in the latest quarter, and he has also purchased Indiabulls Housing Finance. Now, what are some of the key stocks that he has sold? So very quick commentary there. One of the major stocks that he has sold is TV18 Broadcast Network. He has also sold Titan a little bit, but his holding of Titan is huge. So cutting 0.04% stake is not that big a deal. So just to give you some quantitative estimate of his selling of TV Network 18, because many of you have reached out to me, said that Akshat, you know what, is TV Network 18 a bad stock? So in TV 18, his stake used to be 1.46%. Now it has moved to 1.17%. So it's not as if that he has sold half of his shares in like TV 18, right? So please remember these key points. So now from Mr. Rakesh Jhunjhunwala's recent buy and selling decisions, let me pick 3 very interesting stocks and let me do some quick commentary around it. So let us first and foremost study if Jubilant Formova is an interesting buy or not. I will not do a comprehensive study of this stock, but I will at least give you a direction in which we can start looking at. If you have more information about Jubilant Formova, if you are already a holder, let me know in the comment box whether you like this stock or not. What are the reasons? So that other people are also able to read through your commentary and make their own judgment calls. Also, a very important disclaimer, this is not a buying and selling recommendation. I'm just analyzing these stocks so that you can keep a track of these stocks, right? And whenever the opportunity presents, you can consider taking some positions in it if you feel like. Now, with that viewpoint in mind, let us take a very quick look as to what Jubilant Formova actually does. So it is an integrated global pharmaceutical company, and it has 3 lines of businesses. One is pharmaceuticals, contract research, and development services. So it's a pharma company. If I show you the revenue split of the company, you will see something very interesting, that 30% of their money they make through radio pharmaceuticals. This is very, very interesting because there are very few companies in India that are in this line of business as of now. Similarly, a large part of their business focuses on secondary pharma. So secondary pharma simply means that they are producing finished drugs, so to say. They are not just simply producing the raw material, which is API. So majority of the drug companies in India are into API or active pharmaceutical ingredients. API simply means that it is the raw material through which finished products are made. But Jubilant Formova's majority of the business does not come from API. So this is a very, very interesting difference, because if second order pharma companies grow in India, because India manufactures a lot of API, then this API itself can be used within India. So it becomes like a great business model for a company operating in India. So let us very quickly complete the fundamental analysis of the stock. And if you take a look at the financials, you will clearly see that the company has been growing year on year. Yes, it grew very actively here. And after that, the revenues have started to come down a little bit. But net, it is still a very profitable company, which is giving out consistent profits. That's one part of the equation. It's neither a buy or a sell just by looking at the financial numbers. But the good point that you need to remember is that the pharma industry is on an upswing in India. Every country is trying to build its local capabilities, be it in terms of manufacturing the raw material, which is API, or finished pharmaceutical products, because all the countries have realized the importance of having a very strong pharma sector. So companies like Jubilant Formova can become a strong contender. Now, if we look at the charting history and do a little bit of technical analysis, what you will see is that it is actually in the process of following a cup with handle type of a pattern. So the technical target can come out to be around 1500. Again, not a buying or selling recommendation. So will I be buying this stock? The short answer is no, that I will not be buying this stock. I have not done a complete due diligence on this stock. If you want, I will read more about this stock. If this stock looks interesting to you, please give your commentary also whether you like this stock or not. And then I will make a 3 best buy stocks in the pharma industry. The second stock from Mr. Rakesh Jhunjhunwala buying and selling list is Canara Bank. I am an investor in Canara Bank. I have purchased more of it. Now, what were some of the reasons? So 4 important points that I will discuss. First key thing is that right now there is a down phase in the economy. Down phase means that the markets are shrinking. So markets have approximately corrected by 12%. That is what Nifty 50 tells us. And banking stocks have corrected more. Why does that happen? If you have been listening to some of my videos, you will understand that banking is a growth sector. So when markets are shrinking, then banking stocks are going to fall more. And when markets are rising, that banking and finance stocks are going to grow very, very aggressively. So banks have been undervalued. They have already corrected more. Now, third thing, when it comes to public sector or PSU banks, they have been getting crushed a lot for a very elongated period of time. If you pick Punjab National Bank, if you pick Canara Bank, if you pick any bank, all the PSU banks have been battered like anything. So they are already at a reasonable valuation. Am I doing a fundamental investing in it? The answer is no. I am going to simply swing these stocks. That whenever the markets recover, my hope is, or my hypothesis is, that these stocks are going to go up, especially PSU banks, and then I'm going to sell it. I'm not going to wait and hold it like the way I hold something like HDFC Bank. So this is the third key thing. And fourth and finally, all this theory needs to be backed up by fundamentals. So let us quickly check the fundamentals of Canara Bank as of now. So you can clearly see that there has been an upswing in terms of the revenue growth. There has been an upswing in terms of the profit growth. So no major problem per se. If you take a look at whether the prices make sense or not, so you can clearly see that they have been battered quite aggressively, and we are not buying these stocks at super high valuation. Now, one more point that I will draw your attention to is the volume levels here. So you can clearly see that there has been an interest or given interest in these PSU banks, which did not exist between this period. So there is going to be an upswing period in PSU banks. Again, not a buying and selling recommendation. Please do your due diligence. I'm just pointing to the facts. You can aggregate these facts and take a chance. Investing literally means taking risk with your money. It's not a guaranteed thing that, you know what, okay, this thing will 100% play out. We are all doing approximations and taking intelligent bets. I'm being 100% honest with you. So this is my commentary on Canara Bank. Let us now take a very quick look on TV18, because Mr. Jhunjhunwala has cut some of his stake in TV18. So is TV18 a bad stock? Let us do a very quick analysis of the financial numbers of TV18. So you can see that revenues have been going up, no problem there. Profits have also been going up, no problem there. Let us look at the pricing, right? So prices have actually been down. Now the sense that I'm getting from TV18 is that a lot of investors are getting out of TV18 stock because they have already made money. In fact, I also made money from TV18 and I sold my stake. The bottom line is that why did I sell my stake? Because genuinely I don't see any more growth opportunities or massive, impressive growth opportunities, and I'm already invested in some other media companies. I'll make a separate video on that. Let me know in case you want me to make that video. But to cut the long story short, at least I was not able to figure out specific growth plans that TV18 had. Yes, the numbers right now look sensible. It's trading at a low price also. The profit numbers, the revenue numbers are sensible. There is no problem per se. It's not a panic selling or panic buying opportunity. So in case you are an investor, you could consider staying there for a little while. But the important point that you need to keep in mind is that people have started booking profit on TV18. In fact, they have been booking profits for a while now, and therefore the prices have corrected. So with that viewpoint in mind, let us now move to second investor and let us move to an international investor and the biggest international investor of all, which is Mr. Warren Buffett. So here is the entire portfolio of things that Mr. Buffett has recently purchased mostly. So you can take a look that he has actually been a net buyer over a net seller, and some of the key things and very, very interesting things that he has purchased is Chevron Corp. He has also added a new buy called as Occidental Petroleum Corp and added huge quantities also. For example, Apple, HP, these are tech stocks. So he has been buying all these different set of companies. Now it would be impossible for me to go into details of everything, but I will give you a broad commentary. So let us first and foremost take a look at Chevron Group and Occidental Petroleum. So what is it that Chevron and Occidental Petroleum does? So they are into petrol, vehicle and conglomerate based businesses. So Chevron manufactures cars also, mostly traditional automobiles. And what about Occidental? It is into oil and gas exploration all across the globe. So both these companies get heavily impacted due to commodities like petrol/oil. Very, very important point to keep in mind. They are into commodity play. For example, if you study the performance of Maruti has not given any return over the last 4 years. In fact, the returns are negative. Why? Because Maruti is a cyclical stock. If you get stuck in a commodity called as automobiles, there are very, very long elongated cycles. Similarly, if you get stuck in commodity, for example, something like oil, there can be very long elongated cycles. Similarly, if you get stuck with commodities like gold, there are very, very long elongated cycles. So please keep this in mind. This is the first key thing. Understand the nature of the business that you're trying to pick. Second, this is very dangerous play for retail investors. Why? Because both these companies are heavily oil dependent, and oil-dependent companies are sunset industries as of now. The entire world is migrating or looking for avenues to migrate to EV. And the current Russia-Ukraine crisis, where majority of the Europe has been hit due to lack of oil supply from Russia, innovation will get accelerated in Europe now. They will deliberately look for alternate sources of energy. So this entire game of cutting out this oil dependency is going to accelerate in Europe going forward. So this is not a buy and forget type of stock that, hey, okay, invest your money today, hold it for 10 years and see yourself get rich. Maybe it will work out. I don't know. But personally, I am not investing any money in it. Why? Again, very, very important that right now this industry is benefiting from a temporary shrinkage of oil supply. Therefore, oil prices have gone up. Therefore, it will get reflected in the higher profit margins and higher revenues for companies like Occidental. But is this forever going to continue? The answer is no. There has been a surge and it will come down. And whenever it comes down, Mr. Warren Buffett would know when to exit it, but you and I would not know. So highly dangerous stock, but I'm just putting it out there because these are new buys for Mr. Warren Buffett. He would have, of course, seen something which I can't see or explain. So I am also putting my viewpoint out there. Now let us look at the next category of stocks that Mr. Warren Buffett has purchased. These are actually some good buys and I am also buying it. So these are tech-oriented stocks and there are two stocks that he has purchased or added more of. So one is Hewlett-Packard, HP, and second is Apple. Both these stocks are available at a great price right now because what has happened in the US market is that the stocks went up like crazy and then they fell quite a lot as well. And guess which were the calamities? These were something like Tesla, Facebook, Zoom, etc. But when it comes to traditional businesses, for example, Amazon, Apple, Microsoft, all these companies are doing fairly well as of now. Why? Because they are already existing at a sensible valuation. So let me prove that point by talking about the example of Apple. So here you can clearly see that it was trading at roughly $177 and then it fell all the way to $137. So this is a major correction for a stock like Apple. Having a correction of approximately 20-25% is huge. Look at the PE at which it is trading now, 24 PE, which is a decent PE for a stock like Apple. What about HP stock? So HP in the past has had growth oriented issues and what you will see is that their PE ratio is extremely low to begin with. Why? Because for the last couple of decades, HP has been struggling in terms of accelerating its growth and therefore its stock price has been just literally moving in a certain range. So this is a very important point to note and now it has started to give out a breakout and it is very interesting to see that Mr. Warren Buffett has actually purchased HP. So am I going to buy HP stock right away? The answer is no. I'm going to wait. I'm going to study this stock a little bit. But am I going to buy Apple? The answer is yes. I'm already purchasing Apple. It's a solid company. The revenues are going up. Profits are going up. Brand building is massive. They are also getting into insurance business. These days, if you notice that if you're going and purchasing your iPhone or any kind of laptop, the customer service people, they will make you buy an insurance for your phone. So this is a big revenue stream for Apple, and this is a very clear growth area for Apple. So I'm very bullish about Apple. And now, because the stock is at such a sensible buying level, I'm definitely going to invest in it. Again, not a stock buying, selling recommendation. This is just my viewpoint. Now let us take a look at our final investor, which is Mr. Vijay Kedia. And these are some of the big moves that he has made. One very interesting move here is Affordable Robotics and Automation Limited. He has purchased 14% stake in this company. Huge stake, right? He's also an investor in Webhub Global. This is a very talked about stock because the stock has fallen quite a lot. So these are two stocks that I'm going to speak about next. Let us very quickly first touch upon Webhub Global. So what does it exactly do? So Webhub Global is a global retailer and it sells a lot of jewelries and accessories and lifestyle products. If you study the product mix, they make almost 70% of their money by selling jewelry and almost 30% of their money by selling accessories. And it's a very well moated business in the sense. And it is a global player. Majority of it is export, that they are exporting almost 70% of their stuff to the US and 30% in Europe. So extremely global player. This puts the business at risk, especially in this environment when global trade is somewhat shrinking. It becomes a problem for these type of companies. So this is the first piece of commentary. Now what you will observe is, and I will show you two data points. So take a look at the sales number. It has been constantly going up. So no problem there. And even the net profits have been going up. No problem there. But what you will notice is, and this is the second piece of information, that the stock climbed up to approximately 1000 rupee. And then it fell, and right now it is trading at 338. So it has lost almost 70% of its value. This, according to me, I won't use the term pump and dump, but I hope you get my sentiments that this stock was played with. And why am I saying it? So take a look at PE ratios. Now, many of you would say that, Akshat, you're not a believer in PE ratio. Why are you talking about PE ratio? Because I'm doing a relative comparison of PE. So PE becomes useful if you're doing a relative comparison. But if you're using PE just in isolation, then it doesn't make any sense. So take a look at PE. That usual tradable PE for this stock is around 30. And look at the PE that it reached. So it approximately reached 47, 48 PE also. If you consider the PE of some of its peers, for example, consider something like Rajesh Exports. It is trading at a PE of 16. So do I see further fall for a stock like Webhub Global? Most likely the answer is yes. Now again, this is not a buying and selling recommendation, but from a fundamental viewpoint, Webhub Global seems a little bit distorted. Now let us look at the final stock, which is a very interesting stock, and it is Affordable Robotics and Automation. Mr. Vijay Kedia buys some really complicated stocks, and this is a very interesting stock to purchase. So what does Affordable Robotics does? So you will see that here is the product mix, that they are making 70% of their money through manufacturing and 30% of their money through multi-level car parking system. I did not even understand what multi-level car parking system is. So I went to their website. So this is what a multi-level parking looks like, and this is a super interesting concept because this is picking up in India and this is much needed. India has such high population density, so very little spaces for parking, so many vehicles. So this system is going to get picked up at some point. This is a very innovative idea which is finding its feet, and definitely this is going to get picked up in the future for sure. But am I going and investing in this company purely because of that? I am not investing as of now because Mr. Vijay Kedia's style of investing is very different. He looks for these multi-bagger type of stocks, which works for him because he can afford that level of risk. But I, as a normal retail investor, will not be able to afford that level of risk. But do let me know if you would want me to analyze any of these stocks that I have spoken about today. I try to give a broad information. If you require more detailed information on any of these stocks, I will sit and analyze top 3 stocks names that come up in the comment section, and I'll make a detailed video on that. So let me know. But I hope you got a broad sense, and this is me summarizing the video, that number 1, please don't blindly follow big fat investors. Number 2, please understand their risk appetite and your risk appetite. You don't need to just go by whatever they are doing. Use your own logic brain and pick assets that fit your portfolio. Third, please understand that you're not seeing the entire portfolio of these big investors. It is good to learn from them. Look at the moves that they are making, but at the end of the day, you need to build your own risk mitigation strategy. Don't just simply follow what other big people are doing. So I hope you enjoyed the video. Please press the like button, and I will see you tomorrow.